Hey guys, welcome back. Patrick here. Can you believe what's going on in the market right now? They are completely laughing at us. There is so much noise in the market right now, complete distractions that try to hide what's really going on, which is really simple if you think about it. In this video, that's what I want us to talk about. We're going to talk about exactly what's going on right now and the two things that you need to be doing. So often I'm like, well, maybe you should be doing this or that, but in this case, it is really the two things I know you need to be doing. So think about it. Right now, they're talking about the inflation, the Biden taxes. Companies are reporting amazing earnings and the stocks are still dropping. They're talking about the chip shortages. You have the meme stocks that people are still focusing on AMC and the short squeezes and all of that BS that really doesn't matter. In the end, it is very easy to understand what's going on. I'm going to cut straight through it and then we can move on. You're going to know exactly the strategy you need to employ for the next few weeks. So let's get started. Alright guys, I'm a little wound up today. I'm sorry about that, but I find the current situation very frustrating for the small retail investor. I truly believe that the institutions and the commentators on TV are trying to manipulate us into selling our stocks, not buying anymore, and sitting on the sidelines for the next year. So listen to what they're saying right now. They keep talking about how in the next year we're going to go down 10%, right? There's going to be a big pullback in the market. Everything is so expensive. You should be taking money out. You should be taking profits and sitting on the sidelines. Meanwhile, they're shorting all these big stocks that they've made millions on already, and now they'll be going along and riding that wave for the next couple of years. Let me tell you what's really happening. Over the past year, there's been trillions of dollars injected into the economy and into the stock market. Do you remember everyone was talking about this in 2020? Everyone said, hey, this is going to be priced in, right? That's why the stocks are going from their all-time lows to their all-time highs. And that's exactly what we're seeing right now. A lot of these companies that are doing really well, they're sitting at all-time highs. So yeah, of course, their valuation is stretched a little bit. And that's why on TV, they're trying to scare you into selling. They're telling you, hey, these aren't good opportunities anymore, right? You should be staying away. Meanwhile, they're loading up. You know why? Again, I'm going to tell you. When you listen to the calls this week, you know that Facebook, Microsoft, Amazon, all these companies have reported Apple, how can I forget Apple? All of them have reported amazing earnings. They beat the expectations by sometimes as high as 50%. So that is great, but when you look at these earnings, they're talking about what happened in the past. It's the previous quarter. Everyone knew that the quarters compared to last year were going to be very, very good. But when you listen to these calls, what really matters isn't what happened before. It's the forecast that the CEO gives you for the next year. And the forecasts are not just good. They're not just great. They're absolutely fantastic. They're all going to be doing better than what the analysts are saying. And that's why most of them are raising their price targets right now. So it makes absolutely no sense for the prices to be going down right now. The only thing that makes sense is that the market is exhausted. It has run up so much for the past year that now it needs a little bit of time to catch up. That's all there is to it. There's no big drama. There's no crash coming, in my opinion, right? Do a remind me in 6 months. Maybe I'll be wrong, but I don't think so. We're just going to be in a consolidation phase. Right now, you should not be selling all of your stocks and sitting on the sideline and hoping that it crashes and everything. I don't think that's what's going to happen. We might see a period where it's flat, but right now, most of the pain has already happened. Let me tell you a funny story. A couple of days ago, JP Morgan came out with a report saying that we reached the peak with SPACs in April. Are you kidding me? Not in January, where everything was going up 100%, 200%, 400%. In April, where everything has been crashing, we reached the peak. So basically what I'm saying here is that usually right now, and they're so manipulative, anything that these big institutions are saying, or the commentators on TV, you should almost inverse what they're doing. Let's go on my computer. Let me show you guys a tale of two stock markets, the one I'm seeing that gives me more confidence and I'm more bullish than I have been for months versus the one they're describing where you should be fearful. You bought high, now it's time to sell low. Make sure you play into the hands of the short sellers and make sure that they make as much profit as possible so that they can then go long on these stocks and ride the wave up for the next 5 years as they crush all of the market expectations. No, don't do that, guys. Look at the SPY. Look at this beautiful uptrend for the past year. What else can you ask for? Find the flaw in this chart. Yeah, there's been a couple pullbacks, but they snapped right back up to continue the uptrend. Now, don't get me wrong. Of course, now we're starting to see, if we zoom in, we're starting to see the market going a little bit more flat. That's perfectly normal. Like, that's exactly what we should expect from a market that is exhausted. What's happening is, think about it like a rubber band. The companies that were bid up too much kind of brought back down a little bit, and the ones that were lagging behind, they'll continue going up a little bit until we reach kind of that equilibrium. So the best companies are still going to be ahead, but not by as much. That's perfectly normal. I see absolutely nothing wrong with that. Now, if we dig a little bit deeper, let's look into the SPACs, since a lot of us are SPAC investors. Today up only 9 of them, down 21. So down on average 0.81%. The X SPACs did poorly today. 4 up, 27 down, so on average down 2.81%. So if you look at these numbers, you're like, wow, are we going back to where we were over the past couple of months? Again, not really. That's what I was telling you guys earlier this week, right? On Tuesday, a lot of them reached their resistance. Now they're going to pull back a little bit. Some of them are going to continue being shorted. But overall, we're just going to see that equilibrium. We're reaching that point where the market is just consolidating and needs some time. The reason why I keep talking about gambling all the time, I don't know if you guys care or not, but the thing is that, in my opinion, it really represents a lot of the consumer sentiment about the economy. Think about it this way. If you're struggling financially, like you lost your job because of the pandemic and all of that, well, you're not going to go to the casino and blow whatever money you have. But if you're doing okay and you expect that in the next 12 months you're going to do great, what are you going to do? Well, you're going to want to have some entertainment, and you might go online and bet on sports, or you might go to the casino and all of that. So I'm personally looking at a lot of the casino stocks. I like them a lot. I think that over time they're going to recover amazingly well. Now, those are some of the negatives, right? Today they didn't do too well. But if we look at what happened this week, look at these. Apple reports another blowout quarter with sales up 54%. All right, the 54% is not that significant just because of the fact that even though Apple is in that super cycle with 5G, you still have to rely on the fact that they're comparing it with last year's results, right? So all these companies, the growth is going to look a little bit better than in reality. But look at the next line. That's what is much more important in my opinion. Authorizes 90 billion in share buybacks. All right, when the economy is doing poorly and we think it's going to do poorly, are we doing buybacks? Not really. $90 billion. So they're confident that their share price is too low. They want to buy it back because they think that, hey, it's a steal at this price. And they're not the only ones. Look at this. All right, so Microsoft is pretty much one of the comparatively one of the worst earnings this week, right? So they booked their biggest revenue growth since 2018. We kind of expected that, as I just mentioned, but overall, it were good news. They beat all the expectations, but it wasn't as spectacular as some of the other companies. Facebook revenue rises 48%, higher price ads. Do you guys think that there's going to be more ads in the next year, or are we done now? Are we plateaued? This was the top. Of course there's going to be more ads in the next year. There's going to be new businesses. All of the restaurants are going to reopen. Everything is going to reopen in the next year. Not just next year, in the next 5 years. We're just starting that boom. We're not at the top right now. I don't know why people think so. Anyway, so that's just Facebook. Facebook did amazing. Amazon sales surged 44% as it smashes earnings expectations. So not just the selling items, but also Amazon Web Services doing fantastic. We have one last company to look into, that is MGM. They reported last week. You guys knew I had to include it in here, right? So this is a company I have a position in. I already disclosed that before. So they are worth $20 billion. It is not a big tech stock. People don't have huge expectations of these companies, right? Like they do for an Apple, for example. Well, this is a company that no one understands why it's above $40, when in 2019, when they were doing much better, they were only $30. I'm sure you might have asked to the same question. Right? So here's what people don't understand. You have to look forward, not backward. People expect that they are going to do much better than in 2019 between 12 and 24 months from now. And this is reflected when the CEOs for not just this company, but all of them, Amazon, Facebook, Apple, Tesla, right? They all say that it's going to be much better than what has been priced in already. That's why the company is above where it was in 2019, right? So they already said that in the back half of 2022, they were going to recover and be back to 2019 levels. Well, that's changed already, right? 1 quarter later, they pulled this back 6 months. The economy is recovering so quickly, so much faster than people expected, that everything we thought was priced in is wrong, right? It's going to be higher than that. And that's why companies like these are still doing well. That's what people on TV that are trying to scare you, they're not telling you that all the CEOs have said that they were going to crush their earnings for the next couple of years, and you shouldn't be worried about it, right? So companies like this, they pulled back 6 months. They're going to have almost full occupancy this summer. They already talked about that. Room rates are up $10 to $15 in a lot of cases. There's a 20,000 person arena for the McGregor fight that they sold in 22 minutes. So this Las Vegas is open. The rest of the economy is open. They're going to do great. So even better than that, this company, but also Facebook, they said the same thing. They cut costs a lot over the past year. This company, they're saving $450 million. That means in the second half of 2022, when everything is back to 2019 levels, not only are their revenues going to be up, their profits are going to be up. So they're going to do so much better than they did before in 2019. And that doesn't even include BetMGM that they're supposed to do an extra $1 billion in revenue from. So just wanted to let you guys understand this, right? So it's not just this company. I do have it in my portfolio, but all of them are like that. The projections are understated. All the CEOs are saying that they're going to do better than what's been priced in already. That's why all the price targets by the analysts are going up right now while the share prices are going down. So what do you do about it? All right, guys, in the wrap up, I just want to mention 2 things I know people need to be doing right now. The first one is structure your portfolio to where you want it to be in 12 to 24 months. It needs to have a little bit better allocation than it probably does right now. Over the past year, a lot of us went with a lot of short-term momentum plays. Now it's time to go long on more positions. So if you have 100% exposure to no revenue SPACs, that's probably not the best way to go right now. You want to have a more balanced portfolio. Even if you want to be more of an aggressive investor, there's absolutely nothing wrong with that. A lot of my portfolio is speculative, but you still need to have a cornerstone stock in your portfolio that has a little bit more like fundamental value that actually generates revenues and profits. That is going to really help you over the next year or two. Now, maybe they're not going to double in value necessarily, but if you can make 25-30%, that is really going to anchor your portfolio, and I strongly encourage you, right? So if you have 100% exposure to SPACs, now is going to be a great time to actually fix your portfolio and get a better allocation, as all of these high conviction, high quality stocks are getting beat down by the market because there's so much selling pressure, which I feel is unwarranted. Yeah, they're high right now, but if they drop a little bit and we think that they're going to be at a new high fairly soon in the next 6 months, 12 months, then there are going to be a lot of good buying opportunities, and I strongly encourage you to look into them. Let's say that Facebook goes back under 300. Tesla goes to 600 or less, right? Those are the type of plays that are high conviction, long-term plays that you could be interested in maybe. Right? Second thing is right now is going to be a great time to focus on cash flow, either through selling options, or I'm even going to say the forbidden word, dividend stocks. So the first one is selling options, right? When you sell options, you collect cash. So you'll be able to use that cash to buy these long-term plays as they're coming down. And the good thing about it is that to generate that cash flow, you don't even need the stock to go up. It's even better if it's flat for a few months. So that's exactly why the 2 things like really go well together. Is if you go into high conviction plays now, as soon as you see some weakness, you'll be able to spend a few months and generate cash flow with them, even if they don't spike up in price. So often you can generate about 25% per year. That for most people, even if you're not a super active investor, that is very reasonable if you follow it like once a week or something and you sell covered calls. So that is what I strongly encourage you guys to do. Even dividends right now would be not as bad as usual, because I really expect the market to be fairly flat over the next few months. So let me know in the comments what you guys think. I really hope this helps. If not, let me know. Right? Not all of the videos are created equal, of course, but I strongly encourage you guys to follow some of these, really look at your portfolio, see if you can improve it over the next couple of months, because you're going to have much better opportunities now as people are trying to make you sell your stocks. Don't buy high and sell low, do the opposite. All right, guys, I'll see you later. Thank you.